All right, guys, welcome to day two of my 4-day live execution training sessions. My name again is Mark Shawson, the Pattern Trader. I just wanted to, give you guys a chance to introduce you to my price action, price pattern trading methodology. If you weren't here yesterday, brief bio. I've been trading for over 4 decades. I began, many years ago, and have evolved my trading methodology over the years. I started out being fascinated by charts, and I'm a very, very visual person. And when I first started looking at what's called technical trading, which is looking only at price, you're not looking at information. And I'm going to really talk about that today. There was an announcement that came out before the opening on this company that I was short, and the announcement was very bullish. The stock shot up, and I want to show you why you have to just follow your own analysis. You can't listen to anybody out there. But what I was saying is that I've evolved my price pattern, price action trading methodology over the years, because when I first started looking at the textbooks, I would see a classic textbook double bottom and double top in the market, fire away at it. And then, didn't understand why, I would lose sometimes. And I've come to understand that, the patterns evolve, but then you have to, see how the market reacts. So it's a very nuanced thing. It's a dance between, price action and the interplay of the market and what you're looking at. I'll show you why I am so bearish the stock market. And yesterday we had one of the biggest days in years. And I was shorting into that. I mean, I'll show you my trades. I was confidently shorting. I got in a little early, started buying these puts yesterday. So unfortunately, I paid around $1 for it. I bailed in with like 60 grand that expired this week. That's how bearish I was. And now I'm down about 30 grand right now. But we'll see. We'll see what tomorrow brings. I think the market's going to crash and I'll still come good. And then I was short Beyond Meat, and I was long the SQQQs, which are an inverse thing. And I'll get into all of that, but I just wanted to kind of give those who hadn't attended just a brief bio. I've been trading for a long time. As you can see, I eat my own cooking, meaning that whatever I'm telling our members, believe me, I am doing in my own account and then some. And this is a snapshot of only one of my accounts. I have many, at least a half dozen. And you can see I've got at least 500,000 or more, invested in entirely short positions in the stock market. So, and this is just one account. I've got accounts all over. I've got just only 1,000 shares in this account, short Beyond Meat. But I probably got, over 10,000 shares, of this company short. In fact, this was the email that was sent out to our members yesterday. And this is sent out, March 1, Monday. And, maybe a little light to see. I'll blow this up, on the live charts. This was the stock of BYND, Beyond Meat. Now, this discussion, is going to be helpful whether you trade the stock market, whether you trade individual stocks or not. What I really try and do in these sessions, and what I really try and do at the Pattern Trader, is educate people to make their own decisions. And I think this is the greatest example of that, because before the market opened, the market closed yesterday around 147. You can see, I'll show you the setup. And then in today's, before the opening, the stock was up $7, and I'm going, what the hell's going on here? I mean, the stock looks so bearish to me, and the market opened up $7 higher. And there was some analyst at Citigroup that put a bullish call on this thing, said it was going to go to $184, and it was trading at about 147 last night. So this is, good example of, it was actually a stop order. I forgot to use the word stop in here. It was a sell stop order because the market was above this price at 145. And the market opened today at around 151 and then went to about 155. So if it had kept going up, then you wouldn't have been put in it. But, then the market went down, closed under 140. So if you took this signal, you'd already have $5 in this trade. And I just said, this has formed a double top price reversal. You have a key reversal, you have an inside day bar. I'm going to show you this on the live thing. I said, if you measure from the neckline to the peak, it suggests that this stock could go to $75 or lower. Now, this is despite the fact that, an analyst that probably gets paid $1 million a year put a bullish call on this. And today, this morning, said that this stock was going to 184. So now I'm seeing something objectively in the market that says that this stock is going to do nothing but go down. And then you got some guy who's crunching the numbers, who's and looking at things that don't have anything to do with the market. And this is the greatest example of why you have to do your own thinking and why, price analysis is the only thing that you should look at, because it's, price is ahead of the news. Price is a discounting effect. So everyone asks, do I trade the news? I always say price is the news. So price is ahead of the news. So while this analyst was crunching his numbers and, looking at potential earnings and, this company, also recently did a deal with McDonald's and I think Coca-Cola and Taco Bell. It's been doing deals all over the place and it's been looking great. I mean, deals sound fun, but, I don't know what the economics of those deals are, but the market does. And the markets are telling me that, this thing just looks like it's, going to go straight down. So I'm just trying to open up a broker account here to show you this price chart. So this is what I was looking at yesterday and what I sent to our members. And if you want to get, my daily emails like this at the end of this, presentation, I'll let you know. So this is the price chart of BYND, ticker symbol BYND. And again, if you trade the stock market or you don't, this is just about pure analysis. So this could be any chart. It could be corn, it could be pork bellies, it could be the euro versus the yen. A chart is a chart. I just trade price, and you could put this chart in front of me and, I would make certain, risk reward calculations based on that. In fact, two books that I really recommend you guys check out are, they're both called Market Wizards. I think the author's name is Jack Schwager. I read these books, I don't know, 20 years ago or more, and they're great books called Market Wizards. And now, what it does is it basically interviews great traders, whether it be stock traders or commodities traders, fundamental guys, technical guys, and it's a great read. But I'll never forget, there's only one thing that I remember out of those two books was that he interviewed one trader. I don't even remember the guy's name. But what I remembered about him is that he said that he would go into an inner room in his office with just a chair and a table and four walls. There's no TV, there's no distraction, there was no outside information, there were no forums, there was nobody, having conversations. He was just in a vacuum. And then he'd have his secretary come in with his charts. And the thing was, there was no name on the charts. So this is what he was looking at. It could have been anything. It could have been crude oil. It could have been gold. It could have been IBM. He was just looking at this chart and saying, wow, I see certain things. And, to me, a lot of things stand out in this chart. So this is the chart of BYND. And I was saying to you guys yesterday, I see this double top here, and then this, kind of shoulder, which was here, and it was a head and shoulders, and it was somewhat of a busted pattern. So this had all these bearish signals, and I, started, fumbling around, getting short, in here, made a few bucks, and then I got obstinate. And even though the market, so, when the market gives you a pattern, that pattern either goes in the direction that's indicated by the pattern or it doesn't. It becomes a busted pattern. And so this is kind of the nuanced thing. And this is where I kind of tripped up in my own analysis, where I saw the double top, I saw the head and shoulders, but the market never confirmed it, meaning that the market never went through what's called a neckline, which is simply a line through the pattern. You see it came exactly to this area and then grabbed some support. And then it got into one of these short squeeze things with the GameStop crowd. But, so I got short right here at about 147. You can see that, I'm making roughly $8,000 on this, 1,000 share order. And you can see it was, 140. So I shorted around 148, right around there. And then this thing put on a move to 218. Now I violated every risk management thing because I didn't put a stop loss on this trade. I was so, kind of convinced that this stock had to come down that I just stuck it out. And this time I was right, but next time I will pay the price. But since that time, you can see that we made what I call a key reversal, where the market went to a new high and then closed on the low. So, I look at both patterns and price action, how the price closes within the pattern. Now you can see this was somewhat of a funky, double top situation where one top was much lower than the other, but you can see also the price action at this one peak made a new high and closed on the low. So now, like I said, you kind of have this asymmetric double top, made a new high, backed off, retested it, and now you have this M top, which is a very bearish price pattern. So when you do now confirm, and the confirmation was when you cleared the neckline, which was simply, a line drawn through this M pattern. So now you see this double, top, and again, the peaks don't have to be in the same area. You can see that this peak is way below the first one. But nonetheless, when we look at it, I think we would all agree that looks like an M, or letter M. And that is a price top. So if the price is topping, it only has one way to go, and that's lower. And so I kind of have been sticking to my guns, and I've been shorting all the way, down here. I bought, a bunch of puts, which is a bet to take advantage of a, price decline right in here when the, stock gapped open. You can see it closed here, and then the next day it just gapped open about $6. And then I bought the puts right here, which was a bet on a decline in the stock. And you can see the stock just cratered after that. So, I made about 50 grand in 2 days just on those put orders. So, sorry, I just want to, sorry about that. I've got all these open screens here. When I make, when I make a claim, I like to just, back it up because anybody can say anything in this business. I think I showed this to you yesterday. So if you saw it yesterday. So when I saw that peak, that second peak in BYND, I bought what are called put options. A put is simply a bet, that something is going to go down. A call is something that, is a bet that something is going to go up. So I bought the 175 puts that were just expiring a few days after I bought them at $2.50. And I got out at $12.35, about a 500% gain in just 3 days. And I made just under $50,000. So I have been putting my money where my mouth is on this stock. I think that it's, going to go lower and, probably a lot lower. So let me just kind of get back to this. So I've got a lot of distraction here. So sometimes we can measure, the potential of a move. And so frankly, this was the original bear pattern when I was, measuring from the top here to the bottom. And that was from what? 195 all the way to 115. So that's like $80. And then you subtract $80 off that neckline. And that's about where I think the stock is going, down to $50. And so this again is a good example of why you have to do your own analysis and your own thinking in this business. And today was the best indication of that. So you have this pattern. So, as I said yesterday, what I do is I open up my chart. I look at 25 different, Forex trades, the dollar, oil, different stock markets. I look at a number of different stocks. And, so I just simply just open up those charts and go through it very quickly. And either something stands out or something doesn't. And if something stands out, I send an email to our members. And, the email yesterday was to sell Beyond Meat on a sell stop right here at 145. You can see it closed about 147 last night. And the reason why I did that is that I had a combination of a number of things. So, as I said to you guys, first off, I look at the phase. Sorry, my writing is, really horrible with this. The phase or the condition of the market. Simply, is this market going up or is it going down? You should be able to pose that question to a 6-year-old and say, is this market going up or down? And so, if it's going down, then you want to get in sync with the direction. The second thing is I look for, a precedent or a pattern. Is there a chart pattern that is telling me which way to be faced when I'm looking at this thing? And yes, here is this double top, and it cleared the neckline. So we have the phase, which is going lower. We have a chart pattern, which tells me there's a double top. And then I look for price bars that now tell me when to get in. So it's one thing just to look at something, it's careening down, but how do I set up the best risk reward trading opportunity? And so I wait for a set of days that I call my insurance bar days. Now that's just something that I've coined. So insurance day bar, or it could be an insurance week bar. And with the word insurance with it, what it tells me is that this bar puts me in sync with the momentum of the trade, and also tells me where my risk is. So to me, that's the holy grail of trading. We can't always be right, but if we can set up, our trades with certain knowledge of certain risk reward calculations, then, you don't need to do a lot of things, to make a lot of money, right? And so my insurance day bars were right here. So what is an insurance day bar? So again, this is my own phraseology. The first thing is what I call a key, I should print this, reversal. A key reversal, where a price makes a new level for the day and then closes on the other side. So we can see that right here, sorry, I've got so much distraction going on here. Right here, you made a new high for the, that day, and you closed right on the low. So this is my key reversal. Prices went to a new high and then careened and closed on the low in the direction that I'm looking. Now the other insurance day bar is what I call an inside day. It's either a narrow range day bar or an inside bar. And this can apply to a weekly chart, a monthly chart. It's basically an inside bar, where basically the range of this day from high to low literally sat within the range of the preceding day from high to low. So now, that is a beautiful combination where you have both. You have a key reversal and an inside bar. So now once I know the phase, the direction, the pattern, I see my inside day bar, then I simply sent out an email putting my sell stop right under both of those at 145 with the stop loss at 143. Now you can see this went to 155 first today. So it gapped up. This is where it opened today. You can see it closed yesterday right there at about 147. And it opened right there about 152 and went to about 155. Now the beautiful thing about putting a sell stop right here is that if the market, just opens and starts going higher, you're never put in. So instead of just going into the market, I require the market to validate what I'm looking at. And not only that, the market's going to put me in at the time and price that it's ready to go. So instead of like sweating, and watching this thing go higher today and, seeing some Citibank analyst tell me that, sorry, I didn't finish this, an inside day bar. Instead of some analyst, in some fancy office telling me that this thing's going to 184, I don't know what he's smoking. Price was telling me something else. But instead of rushing in at the market, I simply put my sell stop right there. And a sell stop is an order that gets triggered, becomes a market order once the price comes down to it. So once price went to 155 today and then started careening down, hit me at 145, and now I'm $6 in the pink. It closed under 140 at 139.96. And so the market put me in. It was effortless. I didn't have to think about it. I didn't have to second guess some analyst. I just put my trade in, and now I have $5 of profit. And this thing's just looking good for 115. Are there any questions about that before I go to? So somebody said it's hard to see. I realize. And I put so much distraction here. So let me kind of back out of here and try and make this clearer. I realize, these charts are hard, maybe to see on. Sorry, I'm trying to get rid of all of this information. You know what I'm going to do? I'm just going to get out of this thing and look at it again. So let me just redo it and see if I can't blow it up a little bit bigger. Maybe too big. No, that looks good. Okay. All right. So, so what is the definition of a key reversal? So first, like I said, I look at, a key reversal and an inside bar. So this is a key reversal. Can you see that? Made a new high and then closed on the low of the day. And then it made a new high here and it closed on the low of the day there. Now the significance of that, I don't just look at price action in a vacuum. I look at this in context with a pattern where now, I see that it's the beginning of this. And, look, I'm pretty experienced. I kind of see these things as they're happening, so when this thing gapped up here, I was buying the puts in anticipation that, that this thing's coming down because, this thing told me the whole story. So it was a ballsy call. And I could have lost, my money, but, you win some, you lose some. And I won quite a bit on that day. But now with this full picture in my, rear view mirror, now, I really have the benefit of seeing this pattern, this double top right here. So once you see a pattern, so double top is exactly what it sounds like. Makes one peak, backs off, retests, comes through. And when it comes through this line, it's called the neckline. So this basically confirms what you're looking at. See, here was the neckline down here, but it never came through. It never confirmed it. So when the market came all the way down here, it never breached this neckline. So it never confirmed what I was looking at. And then I just jumped the gun. And, I've had to be patient. I just sat it out. And now I shorted at 147. It went to 218 on me, and now it's at 140. And a terrible trade, actually, a trade that I'm not really proud of. But, I'll take the money nonetheless when I make it. So now once I have my pattern and, the direction, now I look to get in sync with that direction. Once the market tells me that there's a top, a double top, then the market's telling me that it's going to go lower. Now that I understand it's going lower, I want to find a day where I can get in, so you can see that, all during this time, it's somewhat arbitrary. Market went down, then it went much higher. And so I'm waiting for a day or a set of days where I can get much closer to understanding the risk reward. And so what I look for is, a key reversal or an inside day bar. And in this case, I got both. So you can see right here, we made a key reversal, made a new high, and then close on the low. And then the very next day, you can see that that range sat inside this range the day before from high to low. Can everybody see that? Can everybody understand what an inside bar means? So please put a yes or no. So Chanel says, I can see that now. Ian, yep. Den, so a lot of people saying yes. I think so. So again, we'll keep going over it. So now once I see either an inside day bar or a key reversal, in this case, I had both. So that to me is usually the holy grail. When I can see both, then I simply sent out an email last night to our members and said, put a sell stop underneath this bar, underneath yesterday's low. So yesterday's low was, above 145. So I said, put a sell stop right here at $145. And a sell stop means that, if this level is triggered, you get, put in the market. But you don't just go with the market. So what happened was the market opened about $6, $7 higher today. I was short and wondering what the hell's going on, because it's difficult to short stocks now with this GameStop, and they're just running stocks all over the place. There's this company called RKT that had a huge short position, and they're just running this up. So I get a little bit nervous, quite frankly, that it's going to really run up on me. But nonetheless, to me, price is everything. And so it opened higher. And so, our members who got the thing weren't in this thing. It opened and just went higher. So now you just had the sell stop, this green arrow, just resting there. And if the market had kept going up, no harm, no foul. These daily emails, they're just meant to be open for the day. If the order's not triggered, you simply cancel it and look for the next trade. But what happened was the market went higher to 155, and then at some point during the day came and just kissed my sell stop at 145. Now I'm just automatically put in the market. I didn't have to watch some Bollinger Band. I didn't have to guess. I didn't have to watch some overlay. You notice there are no indicators. There's no volume. There's no moving average. There's no Bollinger Bands. There's nothing on this chart but price and time. All I'm looking at or looking for is a picture. Picture's worth 1,000 words. This tells me everything I need to know about where to get in, where to put my risk, and how to stay in this trade. So people will always say, well, what's your take profit? Well, sometimes you can measure these things by degree of the pattern, from the height of the pattern to the bottom. That's from 165 to 218. That's what, $60 or so. And then you minus $60 off this, puts me somewhere around $100. So, I'm looking for this thing to go lower. I'm looking for it to clear these levels, which is around 115. And right now we're trading at 140. So we still have, much to go. But just like, a market that puts me in, I would look for something, if I saw this, some kind of inverted head and shoulders, and some key reversals, I would start, unwinding or getting out. So the market puts me in and the market takes me out. So I had a sell stop yesterday at 145, and then I had the stop loss at 153. Now you can see the 153 has been taken out, but it wasn't after I got triggered. So when I got triggered, the market is went straight down. And so my stop loss is sitting right here at 153. And I don't remember what my take profit was on that trade. It was 115, which frankly, if it gets 115, it's going to go a lot lower. So what I will do is I'll put, a take profit, somewhere arbitrarily down here, at some price. You can see that, my entry was this green arrow at 145, and my take profit is all the way down here. So I certainly don't expect in the first day for that thing to get taken out. If it did, I would be very happy. So what I do is I put like an arbitrary take profit. And then what I want to do is I want to see how does the market respond when it goes through the level that I'm looking at. And you can see this thing, went through like a knife through butter. And so it's like starting to tell me that I'm on the right track. Price is starting to, price is the only thing, that we can pay attention to. Not some analyst at Citigroup, not, the market, not some forum, the price. Price is telling me that whatever I'm looking at, and I know I'm going senile, I know I got some dementia, but whatever I'm looking at, looks like I'm on the right track, because price is starting to, confirm that I'm on the right track. And so now I'm just looking for lower prices underneath here. And, I will, keep, and I don't immediately move my stop loss. I don't want to, cut off the trade. I mean, tomorrow you could get, something like this before it goes like that. So I'm just going to leave my stop loss where it is, even though it's now, well into profit for me, and, see how this thing goes. So Frank says, if the market went up instead of going down, how long do we keep the sell order in? So this was for a daily order. So you would only keep it in for a day. Now sometimes, on Sundays, I send out charts with a weekly trade, and it means that you keep that sell stop or buy stop open for the entire week. So now this is in context with my feeling on the entire market. So you can see that I'm a little bit bearish. So the SQQQs are an inverse indicator. The QQQs are an ETF that mirrors the NASDAQ. And so if you want to buy the market, if you think the NASDAQ's going up, you want to buy the QQQs. If you think that the market's going down, you want to buy these SQQs. This is just an inverse. So when the market goes down, this goes up. And you can see I'm just slightly in the red here. I bought these things early yesterday, around right around here. And then I bought, a couple more in the lows today. And you can see that I've got $319,000 position here. So if the market goes down, this goes up. Now these are puts, which means that I'm betting that the market is going to go down, and they have to go down by Friday. So these were way out of the money. Yesterday the QQQs went to 324, and these are 17 points out of the money, which is just a huge, vast distance. But I'm speculating that the way this market's looking, it could crash. So I bought the 307s, I bought the 308s. They're well out of the money. It was really speculative, but let's see what happens. And then I'm short BYND. So why am I so bearish on this market? Where is let me just drag this over here. And I don't know if this is a good chart, or I need to get the darker one. So this is the QQQs, which is a proxy for the NASDAQ. Let me shorten this up. Let's take a look at the last 6 months. Let's shorten it up even more. So I want you to see what I'm looking at here. Now, I started telling our members Friday a week ago, 8 days ago, that this thing was going to turn lower. And maybe I should begin with that pattern. I talked a bit about it yesterday, but this is a bigger chart, so this may be better to look at. So this is the NASDAQ. And I've just got a short time frame on here, but it's enough for me to look at. Now, right here, you see a double bar that looks like the same. That's just the way this thing closes. That bar will disappear. So you don't have two bars that look like this. It's just one bar that looks like this. And you had a huge reversal today at this resistance. But about a week or so ago, 10 days ago, on a Friday webinar, I was telling our members that this thing is about to get cracked, because I was noticing this thing trading within what's called an ascending broadening price pattern. So again, to me, everything's about patterns, hence the pattern trader. And then I look at the price action once I see a pattern. So we call this, and it's a very idiosyncratic, you don't see this a lot. It's called an ascending broadening because basically it's going up, it's ascending, and then broadening. So it starts out life in the pattern narrow, and then it widens out at the top. And the great thing about this pattern, we know that once it confirms, which is, this is about to do, let me just change the style. It basically did break out underneath here, broke back up, and now, now it's going to break back under. So once something retests certain boundaries and then fails, then, I pretty much know where this is going to go. And this is going to go at least back to the start of this triangle. So this is my first objective. Now, to me, markets always overshoot, and I think that, will actually go lower. But that would be my first objective, around 11,600, about 1,400 points, about another 10%, that I think we're going to go in a hard crack on this thing. Now, we have a couple of patterns. So first off, once I notice the pattern, then I look for the price action where I can now set up the risk reward calculations. And so I get in really early, because I see these patterns like before they're forming. You really should wait till they confirm. You should wait for some breach here where it kind of comes underneath here. I started getting short right here. And why did I start getting short right there is because I saw this thing setting up on the weekly and the daily. This is just a daily chart where each one of these price bars represents 1 week and 1 day, 1 24-hour session. But the weekly showed me the same ascending broadening price formation. And I saw the reversal on the weekly. So, and here's the reversal on the daily where you make a new high. So the NASDAQ, when it made an all-time new high for, the entire life of the index, it closed on the low of the day. Looks benign, looks a little innocent, but that to me is a reversal right at the apex of a chart pattern. And so right here, after, when I was looking at the weekly chart, I started to buy the puts right there. I started to buy the puts for the next week. And here was, where is it? So I started to buy the 320 puts when, this was on the QQQs. They were trading at 334, right at the apex of this green arrow. And I was buying the 320 puts, which would have required a 7% move for me to make money. So it effectively required this thing to drop 7% from here. And you can see it did that. It went through my strike. And so I paid an average of $1 on 350 pieces, 200, 150, and you have to multiply this by 100 because each put is based on 100 shares. So this was actually a $35,000 bet that the market would fall hard very quickly, or all of my money would have been bye-bye a week later. That's a lot of money to kiss goodbye. And I put on several accounts, I put over 100 grand into these options. And where are they? Here. And then I bailed out at 585, 575, 631, and 810. And made about 560% in 2 days and about 195 grand on my 35 grand bet. Because I saw this pattern and this chart action. Like I said, I saw this starting on the weekly. So on a Friday broadcast, when I do what's called a master pattern session, where I look at the markets in detail, I was going through with our members and I was saying that, this is likely, a huge top. Here was the ascending broadening on the weekly. But this is what I was noticing on that Friday. It was also reversing for the week. It made a new high for the week and closed on the low. So while I was looking at the market on that Friday, I was buying puts right here. And you can see the next week that it just fell out of bed and I made a ton of dough. Now, probably lucky, but, I looked at the combination of the pattern the ascending broadening price pattern, and the price action. And based on that, I put a bet on, and I put these bets all the time. Win some, lose some. But you can see now that we're starting to come back out of this weekly pattern here. And once we breach the underside of this, we know where it's going to go, right there. Now, my reference, and a great reference, if you want to see the outcome, we're just at the beginning phases of this ascending broadening. But here's one where I saw it on another chart and made a ton of dough. So again, you can look at these things on currencies, on pork bellies, on any chart. This happens to be the British pound versus the Australian dollar. This is a weekly chart. And this is what I saw. Does it look familiar to you guys now? And this is the beauty of patterns. They repeat in every market, in any cycle, where it started out, it was ascending, started out life narrow, and then it widened at the top. And, I was telling our members, I was already shorting right here when I saw this key reversal. Made a new high, closed on the low, right at the apex of this, just like the NASDAQ has done. Then also created this double top. So you had the ascending broadening price pattern. You had the double top. And so if that wasn't a confirmation enough, once it kind of breached the underbelly of this thing right here, I said that was a short and that this market was going to come back to 175 because that was where the beginning of the thing is. So now you have context. This is where the NASDAQ is right now. And I think this is where it's going. And you can see I placed heavy bets. I'm long the SQQQs, I'm long puts, I'm long everything you can. Now you also have an island top up here. So you have every kind of bearish thing. I've been going crazy. I told my wife it was 2:30, an hour and a half before the market closed, and the market was barely unchanged. So the NASDAQ hadn't even started going down. That's what these things do. They like a lion in the grass. They just wait for their prey. And this thing then just fell out of bed in the last 40 minutes. And I said to my wife, this has to crash. This has got every ingredient that, I could ever look for. And for, yesterday it rallied really hard. And today it looked like it was holding up. And I was going, this just doesn't make sense to me. And I was having a late lunch and I was just telling my wife, this thing has to go down. And obviously I have a huge investment in it going down. So wasn't entirely objective, but I was, because to me, these are the objective metrics. Here's your ascending broadening price pattern. That's number one. Then if that's not enough, you have three other patterns here. Let me get this little distraction out of here. You have this little subtle double top right there. Now this is on the QQQs. This is a proxy for the NASDAQs. And you have a double top. And not only do you have a double top, but look at the price action within the top. Made a new high, close on the low. Made a new high, close on the low. So when I get the feeling that a pattern is forming, then I also look at the price action. And if the price action starts, telling me something, then I'll get in early. I like to get in right as the market turns. So this is where I bought my puts, and that's where I made 300-400 grand in 2 days, right there. So I saw the ascending broadening, I saw the double top, and now you have two other bearish price patterns forming. You have the head and shoulders. So you're at the top of this one shoulder. But I'm already visualizing and imagining that, this is what you're looking like, a head and shoulders. Now, this thing won't confirm until down here. And then once we're down here, then it's like you can kind of measure from here, 311 to 338 is 20 pips. So I'm imagining we're coming down to at least, the beginning of this pattern, 285 minimum, and probably will overshoot that. I think there is so much speculation built into this market that I think that it's going to come down in such a way that it's going to make people's teeth rattle. So you have the head and shoulders, and then so you have the ascending broadening, you have the double top, you have a head and shoulders, and you also have what I call an island top. Can you see these two gaps here? Right there. So now this thing is just set adrift. This is an island up here. So this thing is now set adrift where, the market, is now departed, and this thing is just orphaned up here. So that's why today I just said this thing has to freaking go down. It's got every bear price pattern that I can think, but you can see I kind of got in early. On this rally, I got cocky and I started buying my puts right about here. And that's why I'm underwater on my puts, because yesterday it rallied and now I'm like 17, points out of the money. So my puts won't pay unless we come through this price, and we got to do it by this week. But I think this thing's coming down so freaking hard that it could probably come through there by tomorrow. So let's just see what happens. But to me, this has got every bearish price pattern. And then today you have the key reversal. So if you're unsure, you have the double top, you have the head and shoulders, you have a key reversal. And so you put your sell stop right there. So whatever today's low was, 318.40, you close right in the low. You can put your stop at 318.25 or what have you, and have yourself a whale of a time. So you can see it's trading about 318.39. The low was 318.14. So you could put your, a sell stop at 318.05 or whatever you want to do. Now I also see the stock lift, which is something I told you that there was a buy yesterday. And you can see that it's up $2 in the aftermarket. Now, before I go to lift, let me just tell you why I think the selling hasn't even started. So as big a day was today, and as much as we've kind of sold off from the top, I don't think we've even started. And so I'm looking at all of those patterns, but this is another inverse thing. It's called the UVXY. And maybe I'm just digging into the reads too much for you guys. This is a volatility indicator. And all this really means is that this goes down when the market goes up, and you can see it's basically been going down because the market's been going higher, but it goes up when the market goes down. And you can see, despite the fact that we've had this huge sell-off, this hasn't even started to go up. So now we have this little orphan down here. So I kind of look at many different charts just to get different perspectives, just to see and confirm, what I'm looking at. Sorry, I kind of maybe backed that up a little bit too much. Let me maybe I should take a pause and, answer some questions here. So just let me just get through this thing, and then I'll take some questions. So, I'm like a dog with a bone. When I start seeing a setup like you see in the NASDAQ, the QQQs, and I know what I'm looking at, then I just want to wrestle it to the ground. That's where I start focusing. I don't start looking at, other charts and this and that. I start putting my focus into trying to, take advantage of this move. And, I set an objective to take advantage of a NASDAQ turn, and I'm, already halfway there, and the thing hasn't even started. So I'm looking at the UVXY. Now, this is a volatility indicator. And basically, like I said, when the market's going up, this is going down. And it's really on the S&P, not on the NASDAQ. But you can see right here, it made a low. And then in the last 2 days, it's kind of just made this, what I think is going to be, one of these islands, like where if tomorrow we just gap up, let's say we just open and go higher, you're going to leave this little gap here, and you're going to leave this little thing behind right there. And so you have this little, what I think is a double bottom area. Now, remember, this is inverse. So if the market goes down, this goes up. And so I'm, very much kind of looking at this, because even with today's sell-off, you can see that it was nothing. Hasn't even started. Now, this is on the S&P, and I'm kind of making my bets on the NASDAQ. The NASDAQ is the more risky, area of the market and likely to come off. So I'm just kind of looking this as a proxy just to see what the volatility is. And if the volatility starts expanding, that means the market is starting to decline. And I'm kind of visualizing something like this, where, we get that. And if that happens, then the market gets punished. So let me just kind of give you one more thing, and then I'll back it up and answer a lot of questions. So I made reference to the SQQs, and I showed you that I'm long the SQQs. Like I said, the SQQQs are just an inverted relationship to the QQQs. And the QQQs are basically a proxy for the NASDAQ, right? I hope you guys understand that. So it's just their ETFs that track the market. The QQQs track the NASDAQ, and this is just an upside down version of the QQQs. It's the SQQQs. So if the market is going to go down, it means that this is going to go higher. And I think this is what's going to happen. I bought this thing right on the opening, around 1330. Why? Because now remember, this is an inverse relationship. If I expect the stock market to go down, I expect the SQQs. Now, this is also leveraged. So it's 3 times. So now whatever the market moves, so today the market moved, where's the QQQs? It moved 1.6%. You see that? So this probably moved 4.5%. 1330 to 1350 on a 1330 instrument, probably 4.5. So this will go up 3 times faster than the market will go down. So if you like the market lower, this is something that will go up 3 times faster. Now I see an emerging pattern, and most people wait for the pattern to be completed. So you can see there's just now what looks like an upside down. So a head and shoulders looks like this. So it looks like a man or woman's head and shoulders. This is an upside down version of that. Now we haven't come through this neckline, which is simply a line drawn through the pattern, which is around $15. So, it could still fail. It could still kind of crap out here. And if it does, then the market's going to go back up. On the other hand, if we kind of gap up and go back to that $15 level, that's when the fireworks will really start. So this will only confirm it up here. And now, you can see that there's a lot of white space for this thing to go higher. And if that does, that means the market will go lower. So that is why I am long the SQQQs, because I think the market is going to go down for all of the reasons that I laid out. So now there's probably 1,000 questions. And let me kind of go through these questions. So Anthony said, why is an inside day bar important? Because to me, it represents a coiling of energy, a storing of energy. So today was almost an inside bar. It basically was. Today's range in the SQQQs was within the range of yesterday. And so to me, what this represents is a storing of energy. And the metaphor I always use is that, pretend you put your hand on top of a beach ball, you press it, further and further underwater, and then you let the beach ball, go. What happens? It just uncorks with all that, energy. And that's what an inside bar tells me. This is just like a compression, where the market is just compressing and storing energy, and now will release in the direction as indicated by the pattern. So I don't just look at an inside bar or a reversal in a vacuum. See, you had a reversal right here. A key reversal right there. Made a new high, close on the low. Now, I didn't think that that was going to go lower. So sometimes these reversals are a trap. First, you have to understand which way do you need to be faced? Because the market will always throw you tricks and patterns and curves. To me, you have to look at the pattern, this inverted head and shoulders. And this is just all noise. This is just the right side of this pattern. This is just building this pattern like it was on the left side. And so, now, I look for ways, and once this thing starts getting, underway, probably retest the breakout. And once it starts going, now I understand which way I need to be faced. And if I want to add my position, I'll just wait for a combination of, bars. So, if I get, it's up here and I get a key reversal, this tells me which way I need to be faced. And then this key reversal tells me, how to establish a risk reward. So now I can add to my trade by putting a buy stop above that key reversal, putting a sell stop there, and, getting in sync with this trend. On the other hand, if you get a key reversal and an inside bar, this just tells me that you're storing of energy. And again, I'll put my buy stop above here and look for the market to confirm, what I'm looking at. So these bars just tell me how to get in sync with the direction that I need to be faced. So one attendee says, do you offer training or alerts? I offer a training service. This is not a managed account. This is not a signal program, because you learn nothing. If you said, okay, I'll hand you some money, whatever you see, just put them in the market. You don't learn anything by me doing it. You see that I'm short beyond and long SQQQs, and you don't know what I'm doing or why. And I get hit by a bus tomorrow, then, what good is it? So what I try and do is give people the training to make them independently successful, be able to analyze things. You don't need some analyst, some fancy guy at Citibank telling you Beyond's going to 184 when today, it crashed $15 from the high to the low. Tanya says, how do you measure the time frame for a drop if you were looking at buying puts? So buying puts and calls is a very risky thing, because not only do you have to be right, but you have to be right now. So those puts I bought on the NASDAQ, I required a huge move, this week, or last week rather. And frankly, over the weekend, I kind of thought, are you out of your mind? You just put 100 grand into, something that's going to expire worthless if this thing doesn't crater. And, fortunately, so you have to kind of visualize a pattern, and then that whatever you're looking at, it has to happen right now. So, the way I look at this thing is that, to me, this needs, is likely to go up big tomorrow. So if it doesn't, I would be very surprised. And, if it doesn't, that starts informing me of a lot too. So, tomorrow, if we come and we start going down, I'll go, there's something wrong. This picture is not coming together, as I said. And to me, the only thing that's right is the market. So if the market tells me, hey, this is coming down, then I just simply get out. And sometimes it will actually give me a reverse indicator where, if it's going to fail, then, I'm just going to get in the other direction. But this, I think should gap actually, and should come back to these $15 highs pretty quickly. So if I see a buildup and then I see, a pattern, then I'll buy puts or calls, because I'm expecting a very robust move very, very quickly. But it's a dicey game, because the market can go sideways for a long time. You could think, hey, this thing's going up and this is 2-3 weeks. And typically, because, puts or calls get so expensive, I only buy 1 week ahead. So I'm looking for a move, and a move right now. Rob says, are there any Forex pairs shaping up for a buy or sell at the moment? Yes, there are. Let me get to that in a moment. So Sammy says, Mark, can a pattern fail you? Yes. And when it does, it's called a busted pattern. So this is what Beyond Meat looked like when I was freaking shorting it. I saw this head and shoulders. And it's, and if you see something like this, then your expectation is once it breaks that neckline for the market to do that. But instead, the market did this, close at 140. And I thought, I was just fighting it because this didn't do anything what it should have done. I got short here, and then it ended up, going up there. And I just thought, because it hit this thing so many times that it was going to go through, I took the long road because it went to 218 and now it's kind of coming back down. And now, I'm just in the money. So when a pattern fails, it's called a busted pattern. And frankly, when something doesn't do what it's supposed to do, it will go the other way. And to me, that will, I will just get in that trade and go the other way just because it failed. And I was obstinate. I just fought this one, and I knew that it was, the wrong thing to do. And I just decided to stick it out. And it's, so I'll talk about lift in a moment. So are there any questions about my analysis on the stock market? Because I think it's going to crash for all the reasons I told you because of. So Ari says Dow and S&P failed to break higher today. So I agree with you, I think. So the NASDAQ is the most bearish of all three. So you can see that UVXY is on the S&P and it hardly budged because I can imagine the S&P wasn't probably down a whole bunch. So you can see that's the weekly, the daily. You can see that there wasn't much of a move on, lower on the S&P today, but I see this is the same. They're all the Dow, the NASDAQ, and the S&P are all in this ascending broadening. The thing is, the NASDAQ is already cratering through the bottom of this thing, whereas these things are about in the middle. So you can see this hasn't even started. This will only start when it hits down here, whereas the NASDAQ's already down here. And then once it hits there, I certainly expect it to at least hit there, the bottom of the pattern, but probably more likely there. Once this thing gets going, I think it's going to be cooked. And the Dow, same thing. Where is this thing? So you can see, whoops, I hit that. So I expect the Dow to come at least there. So what is that? That's about 29,000. And we're at 31,390. So 2,500 sounds about right. It's a 10% move. And look, I think once this thing cracks, it's probably going to get really cooking. So I am super bearish. I think you're going to see a move that rattles people's teeth. This thing has been so much speculation built into this. People are under the misguided notion that the Fed has got their back. And so it's just been a one-way freight train. And, this thing's just going to come apart. So Ari says, will the other indexes, S&P, Dow, FTSE, DAX, follow the direction of the NASDAQ? Yes, probably. Anthony says, how do you select to draw the trend line? So this is more, not really trend lines. This is a pattern. So I just connect all the lows in the pattern. That's a good question. I'm sorry if I go so fast. I've been just doing this for so long. I take some of it so much for granted. And then I understand that you guys are seeing this for the first time. So you can see how this connects on the low side. So I basically draw the line under the lows. And then this, I just connect all the highs. And so I certainly expect it to come to the downside of this. And gold is doing the same thing. I showed you that gold is in this ascending broadening. So it's funny how sometimes the market starts putting on the same patterns in a lot of different instruments because, they're pretty much correlated. So let me look at the weekly. This is the chart of gold, XAU USD. Now, the whole world has been bullish gold. And I've been telling our members since July to get out of their long positions and go short. And again, I don't want to just say things. here is my emails going back to January 10th, where you can see that gold was just halfway through this ascending broadening. I was starting to talk about this pattern. You can see we were halfway through in the mid 1800s, and now we're at $1,700, $150 lower than when this email went out, 2 months ago. I was talking about the ascending broadening triangle. I said my target objective is 1,700. Today we got within a hair's breadth, I think, of 1,700. Then I added to my trade. I sold more at 1797. You can see it was making its way. And this was yesterday. And I think the market's right around the same place. So, making, a nice chunk of change. And again, all on the observation of the same pattern that I'm seeing now in the NASDAQ. So, my thinking is if it worked for gold, it's going to work in the NASDAQ. And you can see now we're almost at my target objective, which is around 1650. And then that's going to be really interesting. So once you see these patterns, you can either get to the lower end and do this, or it becomes an inflection point. And if it starts coming through here, then it's going to come all the way back to here, like it did with pound Australian, which is an interesting notion, and you can also see that this has become untethered from the dollar. So everyone has been taught, to correlate that, if the dollar's going down, then gold's got to be going up. But it's been going down at the same time the dollar's been going down. So this, again, just like that Beyond Meat, where some, fancy, analyst told you something, you have to only look at price. So, the combination of noticing the expansion of volatility, you can see how these price bars started to expand significantly from what they were doing. And I was saying right here, without any knowledge, I couldn't see a pattern. I couldn't see a reversal. I just said, you know what? We've had some pretty good times on the upside. I see this expansion of volatility usually signifies a lot of emotion and excess, and that's when I want to be out. And now I just see kind of this huge double top and this thing going much lower. So, if you've been my member, been short for a long time. At 1841 was my, first short up here on this inside bar. Then I shorted at 1797 right there, and have been in this for over a month. And that's the other thing. I will stay in a trade. You can see that I got in the 9th of February and then the 22nd. And so I've been in this one trade for almost a month now. So I will stay in a trade as long as it will have me. And so, we're bouncing around. And I think that this thing still, is going to go lower. So there's some raised hands. I don't understand how to actually answer them. So again, this I take a lot for granted. And so Russell says, when you say something made a new high and closed on the low, can you please explain that? And that's a great question. And again, something that I just take for granted. So when I say low, I mean toward the lower end of the quadrant. So if we think of, let's say a bar, in 4 quadrants, if this closes at this to me is closing at the lower end. You can see that this is a bar, whether it be a weekly or daily, where, that bar made a new high and it closed there. And so this to me is in the lower, quadrant. And so I characterize that as closing on the low. Now, some bars can close, absolutely on the low, but you can see right here, this bar made a new high and closed on the low. Not on the absolute low of the bar, but I think you would all agree, on the much lower end of the bar. So that to me is a key reversal where it made a new low, no new high and close on the low. But this is why I say you can't just fire at these reversals. You have to first understand which way do you need to be faced. And then you look for the reversals that put you in the direction, because Here was a reversal right here. And yes, you got a nice move out of this thing, but if you overstayed your welcome, you were underwater. So, you see reversals all the time, and you kind of got to know which ones to, hold and which ones to fold. You want to take the ones that put you in the direction, of the market. So now I want to look for key reversals this way. Now, at some point you'll get a key reversal this way, and, you can, take a counter trend trade knowing that it's probably coming down that way. So I do all kinds of trades based on the way prices kind of, close and, put themselves together. But, I'm giving you kind of the simple toolbox here. So I hope that Tanya says, so you ignore any news related to government stimulus. Tanya, price is the news. This is the only thing I look at. To me, the stimulus is why I'm even more bearish. You've got so much freaking money out there. Now they're going to give you more money. Now the economy is going to reopen. People have been saving their money because they haven't been going out. So you've got all this pent up demand, and now you're putting more. It's like putting fuel on a fire. To me, that's why I'm even more bearish, because this just is nuts to me what's going on. I see these SPACs, I see these IPOs, I see the Bitcoin mania. It all, to me, is coming together for a perfect storm, where, collectively we've been creating these bubble markets, and we're about to go pop. Where are these QQQs right now? They're trading right at the low of the day, 318.19 by 23, right on the low of the day. So I think you're going to get fireworks into tomorrow. And you can see BYND closed under 140. So that analyst said, it's going to 184. You got to use your own, you got to do your own homework. You can't expect anybody to do it for you. So Santos says, do you always use bars or do you look at candlesticks? And again, that's a great question. And I've been doing this a long time. And sometimes I think, oh, I'm a dinosaur. But to me, visually, this bar, I don't know about you guys, I can just see that. So in all this noise, I can see this bar just standing out so well. So to me, I am very visual. I see the pattern, then I see the bar. With candlestick, it kind of obfuscates. It's more confusing. Maybe I just don't know how to, read them, but to me, I just look at the cleanliness of a bar chart. It just tells me everything I need to know. Here's a key reversal. Here's an inside bar. Here's another inside bar. I shorted both of those, and I'm making a ton of dough. So I only look at bar charts because I just see things so clearly. But, if you see the pattern on your candles, it all starts with, which direction do I need to be facing? So through here, I needed to be facing higher because there was actually a breakout of a long-term double bottom inverted head and shoulders. And it broke out at 1360 right out here. And this is where you need to be long. And our members were long all through this. And then right here, I said, you need to get out because of the expansion of volatility. That was just, I'm impressed with, because when it's up here and the whole world is collapsing as it was in the pandemic. So this was last April, and government is just flooding the markets, and JP Morgan saying his goal is going to 3,000. And I'm saying to our members, get out. And that's kind of what, I find difficult about what I do is that I privately do all kinds of stuff. But now when I've got thousands of people who trust me, when I say get out of your gold here, I just, had a very difficult time with that. I said, it's likely to go sideways, if not lower after that. And then you had a series of patterns once it formed that consolidation. So here was your first break, that symmetrical triangle. Then within that noise, you had this head and shoulders, which led to your next break. And then here was the next head and shoulders, which then led you to your next break. So there, what looks like, just kind of a lot of just price action back and forth I kind of understand how to look within the prices, find the patterns, and find the price action that lead me to the moves. So this looks pretty arbitrary through all of this time frame, but this to me was really, going lower. This is always just, you can see that when you connected the highs through all of this time, you also had this descending triangle. So, I just see, all of the patterns through what looks like just arbitrary noise. David says, I have to go to work now. I find the information here to be very helpful. So yeah, let me know. Do you guys like this kind of input? Do you think that, you could see, value to using this? Do you think that it would help you be more consistent, more profitable, take out bigger moves? So I don't know if you guys are hearing me out there, but I got one yes from Santosh. Oh yeah, no, it's coming through on the chat box. So a lot of you guys say it's a lot of value. Yes, I love it. Very good. Need more training on the trade setup. Sven said. John says outstanding. Dirk says absolutely, but I need more help. All right. So to that end, I'm going to tell you how you can, start getting this training. I'm going to play a video for you. For those of you who don't want to watch the video, you can, just end the webinar here. Please bear with me. I had trouble loading this yesterday. Let me just try and find this again today. Scratch your head in frustration, guessing your way to halfway there, because I've already created the ideal solution for you. Now I'm going to introduce you to my daily journal. On a real basic level, it is a daily email that I send to my inner circle of traders. This email contains the exact trades I'm looking at, where to enter, where to exit, and how much to risk on any given trade. This radically simple yet effective system of delivering scientifically tested trading results will work for you even if you are completely new to trading, or you have years of experience as a struggling trader, or you don't have a computer. A phone is all that is needed these days. Before I show you what these emails look like, I first need to tell you what this service is not. This service is not a get-rich-quick scheme. Real results take time. You're not going to become a millionaire overnight. To get scientific studies, you need to execute this strategy with scientific consistency. If you're not fully committed, then this won't work for you. If you're going to jump from the next shiny object as soon as a marketing guy sends you an email or posts something on Facebook, then this system is also not going to be for you. This is for men and women who are ready to stop looking for miracles. Like Mike, who had this to say on Facebook. I don't know if Mark Shawson realizes the huge impact he is having on some of our lives. I've gone from working 12-hour days in oil to sitting in front of my PC at home for a couple of hours a day, placing trades and learning from his journals. I'm now planning to go traveling too and can trade from my laptop along the way. This has been a truly life-changing experience. Or like Andy, who three accounts, one for myself, one for my son, and another for my wife. So I grossed over 3,800 pounds in 1 week over 3 accounts using the methods you are teaching. Keep up the good work. Best regards, Andy. Andy actually attached a screenshot of the first account he mentioned in his email. I literally have hundreds upon hundreds of emails, comments, and reviews just like this about my daily email service. So let me break down exactly how it works. Every day from Sunday to Thursday, you'll get an email from me with instructions on what to do. The email looks like this. You get an image of the chart with the analysis drawn on it, so you know exactly why I'm entering the trade. Each of the patterns I draw on this chart will have been scientifically tested. You get the exact entry and exit points so that you can enter the trade without guesswork and do it quickly. You also get a brief analytical breakdown. These small, digestible chunks of information help you retain the reason why I enter trades, and it teaches you while you make money. I call this daily email service the Pattern Trader Elite, and you've no doubt noticed that the Pattern Trader Elite is, without question, the most efficient service there is. And that gives you the freedom to experience a scientifically tested trading strategy without needing to spend months or years learning it for yourself. And as any Pattern Trader Elite member will tell you, the results are off the charts. Pun intended. In fact, a woman called Marta sent me the following email. She said, "Dear Mark, I'm doing really well. Yes, the last 2 weeks I've made $15,000 on your recent trades in gold, Australian dollar versus US dollar versus Japanese yen, pound versus Japanese yen, and I do like the Dow Jones Industrials. Thank you, you're a gem, Marta." Now, before I reveal exactly how to sign up to become a Pattern Trader Elite member, I'd like to throw in a few bonuses. The first free gift you'll be receiving is the Pattern Trader Advisory. Every single week, I'll send you a 15 to 30-minute video analysis of the markets. This will give you hands-on training so that you can really accelerate your learning even faster. One of my members, Chris, wrote to me recently telling me how much he's enjoyed the education part of this service. Hi, Mark. I doubt you will read this, but in case you do, I just wanted to say thank you. I have focused my time on learning the principles of your trading strategy, as I feel the education is of most importance to me. I've made 3 trades this week. One, your recommendation on XAU USD, which is spot gold, and the other 2 on my own in oil and the dollar versus the Japanese yen. Oil has dropped out of the sky nearly 500 pips in 1 week, and the dollar yen just started with momentum on the downside. I'm on holiday with the family, which has added to a very enjoyable week. Kind regards, Chris. On our website right now, the Pattern Trader Advisory is $200 per year, and it will be thrown in with the entire bundle of packages for free. The next bonus I'm going to give you is called the Master Pattern Trader. You'll get a live 1 to 2 hour session with me every single Friday. That's over 45 live sessions within the next 12 months in a group environment. Here, you get to watch how I go through the markets, then you can ask questions and discover exactly what I believe is going to happen next. On the website right now, the Master Pattern Trader is $997, which I consider to be underpriced since it comes out to be less than $3 per day. However, here's the bad news. This service is very exclusive. It is not for everyone, which is why I don't just have a buy now button below this video. In order to get into this program, you have to do something a little bit unconventional. I'm running a little experiment where I'm offering people a huge discount. If you'd like to be part of the Pattern Trader Elite service, send an email over to markshawson@gmail.com with the subject line, "Let's do this." I'll send you a detailed summary of exactly what this program is all about, and you just tell me if I should send you a spot or not. I don't want to make this publicly available. First, make sure you copy the address below and email me at markshawsonelite@gmail.com. And then in the subject line, just put, "Let's do this." When you do that, you've taken the first step to joining hundreds of other highly successful traders. We've had many interviews with people who transformed themselves from ordinary people to elite traders. Here's just a small snippet of what they had to say.
Damn it, I'm gonna learn this and I'm gonna figure it out. I finally got angry and said, you know what? I'm gonna figure it out.
You know, for me, it comes down to trust. I really trust what he does, and I follow him, and what he's saying is, you know, accurate. I'm really big on details, and he has the details in there.
And I must say that every winning trade, it just confirmed my belief in his method. That the way he reasons the trade, is actually correct.
Mark is a genuine, sincere, caring individual who cares about his members. He is as smart as any Forex trader that I have ever met.
And it has actually helped me being more secure and be more calm about my trading and about my. I've heard that before also from others, and then I would just repeat this. Or repeat that. He makes me calm when I actually do training. I'm not so scared anymore, you know.
And I do think that y'all's program is definitely key to that end result.
You follow Mark for a little bit of time and you listen, you see he's truly genuine and he's the real deal. He's not full of it. He's not just, oh, I'm boasting. Hey, look what I made this time around. You know? No. It's A, B, and C is going to get you to D, E, and F.
So let's talk results then. So where are you at right now? So you're in the black. How much has your account grown over the last, let's say, year?
So I think based on the screenshot I gave you, it was like about 70 grand CHF. It's still hovering around that level. Essentially what I've done is I withdrew the principal investment that I put in. So basically all the money that is in the account right now is actually profits that I've gained.
I think I picked up probably 852 pips on it. You know, when you don't have a large trading account, you're trading standard lots. You know, they're worth $10. Pip is worth $10. So 852 pips in one trade is quite a financial gain.
That's what he actually brings, I think, to many, the calmness, you know, the don't worry, you know, believe what you're doing and just and analyze it, you know, and the way I do and see if it works. And we must say, you know, his results, you know, are also showing that it works. So that's fine. I think that's great, and I'm looking forward to even work even more with him, you know.
And just follow what Mark has laid out, you know, exactly for a while, and make sure you see how it works, because it does work. That's the way to go.
There's a better way, an easier way. And I think that's what resonates mostly with me. A much better way, much less stress, and the proof is in the pudding with Mark.
You know, if there's anyone out there who's lost his money or is down and stuck, and he needs something like a lifeline to turn his life around, anyone can do that. Anyone. So it represents a lifeline, hope for anyone who's willing to learn and to apply his methods.
I like recommendations. I like having a safety net. I like having someone to listen to, because, you know, there's always somebody smarter than you. Not the sharpest knife in the drawer, but when I follow somebody who I consider to be extremely knowledgeable and extremely trustworthy, I'm going to stick with them. And that's what I found.
And I do think that y'all's program is definitely key to that end result.
If you're ready to join, then send an email over to mark.elite@gmail.com with the subject line, "Let's do this." I hope you've enjoyed watching this presentation half as much as I enjoyed making it. I'll see you on the other side. What I'm about to Okay, guys, I see Peter's on. Peter, can you hear me?
Yes, I can hear you.
Okay, Peter, thanks for coming on. Like I said, Peter's in the wee hours, so we thank him for Peter's. My marketing partner, Peter's a guy I curse every day for getting me in this business. That's a joke. That's a joke. Partly. You know, I met Peter around 2010 when he had his own trading business. I told him what I was doing. He was pretty fascinated. And we went in different directions. And then about 5 years later, he said, "Mark, you have to, you know, kind of share what you do with a lot of people." I fought him for many years because I didn't know if I wanted the responsibility, but you know, we started the Pattern Trader together in September 2015, and frankly, it's been the best thing I ever did. I mean, I show you that I make money every day, I lose money every day, but kind of, you know, having the entree and the second family to talk to has been really one of the greatest things that I never anticipated. So maybe I'll just, you know, give Peter a little chance to talk, introduce himself, and say a few words. Peter, I finished my presentation. I mostly concentrated I'm very excited about the opportunities, in the stock market right now, basically going short because of, some very, compelling patterns. But maybe you can just say a few words and wrap it up.
Yeah, for sure. Guys, thank you so much for joining. The reason why I popped on at 5:30 in the morning, my time, is simply I wanted to check out what you guys were saying. I wanted to have a look at Zoom. I always kind of try to get up early on these days so I can catch the replay, because otherwise at 4 a.m. I wouldn't be able to check it out, because I'm always so excited about how excited Mark is. But a lot of you don't know, and I mean, I suppose it is explained in a lot of the stuff, but one of the biggest objections we ever get to anything is they always go, oh, if Mark is such a hotshot trader, why is he teaching this stuff? Hopefully you guys can see that he's just incredibly excited to share his knowledge. And we recently got a review from Prashant on Trustpilot, where he's been part of the Pattern Trader since 2016, and he's upgraded his life now. So as in, he doesn't need Mark anymore. He's been trading with Mark for like 4 years, and then just went out by himself, and his account is now well over $100,000. I think it started at about 10,000. Maybe tomorrow we can share that review. But basically, me and Mark were talking about this about a week ago, because I think he put up the review about 6 days ago, and we were talking about this, and this is really the reason why Mark does it, because there's nothing that can fulfill you quite as much as getting that kind of validation from someone and changing someone's life in that way and passing your knowledge on. And that really is the reason why Mark does this. So all of the business side of things, all of the sales side of things, I take care of, and Mark just kind of does the stuff that he loves, which is teaching. So we have a team of about 9 people in the background making things happen for him, so that he can just go ahead and pass on his knowledge. So, because I know that's a question.
Are we able to access that Trustpilot review off our website?
Yeah. Let me just go.
I'll just pull it over. So can you see it?
No, you're still sharing the.
Oh.
You're still sharing the video.
Oh,
So I mean, I can go to it. 1 second.
Well, let me go to my screen here. I'll share it. I've got it up here, Peter. If you just tell me where it is.
1 second. Let me just.
I've got it up.
Oh, if you go to case studies.
Go to case studies. Okay.
Yeah, well, that'll be embedded on the website. So you scroll down past the case studies. Go. Yeah. But yeah, you can't read the whole thing, so you're gonna have to. No, that link is actually broken. So if you just, I can share my screen if you want, because I've got it here.
Yeah, if you want to. So this is our website, by the way, thepatterntrader.com. You can go check it out, and here are some of the reviews, and they're all independently verified. You can leave whatever review you want, and we'll post it.
Yeah, Mark. So it's not allowing me to share my screen.
Okay.
Because I don't have.
Can you send me the link in Skype, Peter, and maybe I can post it from there.
Yeah, sure thing. So if you scroll down to Prashant, that's the one. That's the one I was referring to.
So before I came across, I was a would-be trader for over 10 years. I was never able to beat the market. And I happened to see a video of Mark in 2015. The first time I saw his video, I knew that I was not just looking at another trader. I really knew that he knew what he was talking about, seeing his calm temperament, confidence, and logical reasoning. I knew I may have found the answer key to the market. I followed his videos for more than a year, finally decided to take up the Master Pattern Trader. It's really been a transformation for me, and you guys can, I'll just put the link in the chat box here, and you can check it out on your own. If you want to just say anything else, Peter.
No, that's it really. I just wanted to have a little chat about just your motivations and everything behind this, because when you get reviews like this, when you can see that someone has now got over $100,000 in their account and they started out with 10, you know, this just
Yeah,
that's
he
what
says
we
I
like.
took
We just
my
love
took my $20,000 account to $80,000 right there,
yeah, yeah,
and then I surpassed $100,000. I made 58% in the month of January. So yeah, it's entirely possible.
yeah.
You know,
And he doesn't even follow Mark's trades anymore. He looks at Mark's videos and stuff, but he doesn't actually follow, because he's done it for years, and then he's basically been made independent, which is the ultimate aim. So people are asking about the replay and yesterday's. So yesterday's one is on YouTube. So I can quickly post the link to that.
I couldn't live stream today, Peter. There was something wrong with the browser, and it wouldn't allow me to live stream.
Oh, that's okay. We'll post it. But yesterday's
Actually, Jackie has a typo. It's Shawson with a W, Jackie. So
yeah, so that's yesterday's replay. So yeah, the email is markshawsonelite@gmail.com.
yeah, I just popped it.
Yeah. All right. Okay. Thank you so guys for listening to me waffle on. But I guess we'll see you guys tomorrow. Thank you so much. And if you could just put in the chat box of what you thought about this presentation and what you thought about what Mark said, to anybody that hasn't joined one of these live sessions yet, perhaps we can let them know. David said, yes, I agree. Elite is the way to go. I've seen it all, but this is different. It's real. Thanks, Mark. Thank you, David. Really appreciate that. All right. That says great content. And that says, thank you, Mark.
All right, guys. Thanks a lot. I'll see you tomorrow, 4 p.m. Eastern Standard Time.
Yeah, I can't wait to see what's going to become of these markets you're looking at. It's going to be really interesting.
Okay. All right. Thanks, guys. Thanks, Pete.
Thanks, everyone. Bye.